Good morning, everyone, and welcome to this morning's webinar. Today's session is being recorded, for those of you that just heard that message, and it will be available later in our Investor Centre on the Novatti website. It's just turned 11 o'clock now, so I'm going to start today's webinar, and thank you all for joining us. My name is Beth Moylan, Head of Marketing at Novatti, and I'm joined today by Mark Healy, CEO of Novatti. Mark's been leading Novatti's transformation to become a market-led and customer-focused organisation and delivering seamless payment solutions that help businesses across Australia and New Zealand both succeed and grow. We would love and really welcome you to submit questions to us as this presentation goes on. So please add your questions to the Q&A box and we will spend some time at the end of the webinar going through those questions. If we don't cover a question in the Q&A and you do want that covered, then please email us directly at investorrelations@novatti.com and we'll make sure that we respond to you directly. Over to you, Mark.
Thank you, Beth, once again, and good morning. Welcome and thank you for joining to everybody on the call. As an opening remark, I will say that the Novatti entry into FY26 is really pleasing, as it represents a complete break with the past and demonstrates that what we're doing is working. It demonstrates that we now have a sustainable business and we are moving forward with momentum. Our Q2 results really highlight the ongoing strengthening of the company at all levels, in our operations, the P&L, balance sheet, and also board composition. We have a very clear and focused strategy, and we're continuing to execute strongly on that strategy with clear and tangible improvements quarter on quarter. Our financial performance is lifting with a focus on profitability and cash flow. We're actually building a business to occupy a unique position versus competitors in the local digital payments landscape. Our commercial traction is building, and our core business of Payments Australia and New Zealand has now delivered 4 quarters of positive direct EBITDA. Most importantly, our cash use has improved dramatically with a circa 50,000 operating cash burn across the financial half year. We are a company on the move, I believe, building a very positive future as we continue our pivot back to growth. To kick off, as always, just a quick recap on what we do and how we position. The Novatti value proposition is built around our complete payment stack and product depth. We're a payment solutions business as opposed to providing a monoline payments offering, which is more the norm in the payments industry. That does provide challenges as we have a broader remit, a broader technology footprint, and higher experiential demands than other local payment service providers. However, our view, and my strong view on the market, is that interoperability, not efficiency, is the real value, especially for medium-sized and growing businesses. These companies need simplicity across their payments infrastructure, not more complexity and a spaghetti bowl of payments relationships. We all know we live in a rapidly changing world, and for those interested in payments, a world where decentralized and new programmable rails and digital products are innovating around the traditional, more centralized payments infrastructure to meet up with end customer demand. We intend to build around this interface and provide a bridge across these two ecosystems, providing utility for our customers and adapting to the changing behaviors prevalent in the market. As a reminder, we're predominantly B2B focused, and we provide a range of businesses, software platforms, and other fintechs with the ability to accept payments from their customers across any sales channel and payment type, the ability to design, launch, and manage card programs using both open and closed loops, the ability to both make and receive international payments in local currencies, the ability to connect directly into a range of Asian wallets, and the ability to use vouchers in a range of different use cases across loyalty, wallets, and payments. In very simple terms, we enable our customers to operate their businesses more efficiently with our multi-sided payment solutions. As consumer preferences change and the industry adapts around them, Novatti can develop a position as the leading payment solutions provider, bridging the rapidly advancing Web3 and digital asset economy. Anchored by our investment in the AUDD stablecoin and the range of use cases around tokenization, we are well positioned to support the transition into regulated digital finance. Under the strategic reset, our key focus has been to build a sustainable business driven by the three pillars of simplification, a market-led customer focus, and lifting our financial performance. We are now clearly starting to see the results of the 2 years of hard work under the belt. In terms of our Q2 specifically, for the group, we've dropped slightly below the line on both profit metrics, 100K negative EBITDA and 300K negative in operating cash. So for the financial year to date, we're basically sitting at break even on both metrics. We indicated last quarter that we would bump around the break-even line for the next 3 to 4 quarters as we adjust to the new direction and move across the yearly business cycle. We're confident in the trajectory we're heading. Momentum is building, and we're doing what we can with the balance sheet that we have and selectively pulling levers to lift our growth in keeping with the underlying profitability goal. Most importantly, our core business, Payments Australia New Zealand, is now stable. It's benefiting from the slow burn of the brand refresh, and we are working into new opportunities as we uplift our capabilities. The ANZ business has just posted 4 continuous quarters of positive direct EBITDA, being led by our issuing business with a healthy pipeline building while we're continuing to grow account transactional volume. At the start of this financial year, with confidence in the reset work and a lean business platform that we created, we announced a focus back to growth. Within the ANZ business itself, the 2 near-term levers for growth are card issuing and card acquiring. And last quarter, I went into some detail on both markets and our year-on-year turnaround. Issuing and acquiring are 2 very large markets that effectively back into each other. Novatti has principal membership of card schemes as both an issuer and acquirer, enabling maximum autonomy on how we go to market and how we manage our customer base. It's important to note these businesses are still relatively new to market for us, and we have a very small market share, circa 3 basis points, which is a great opportunity to increase our penetration across both. The Payments ANZ turnaround is being led by issuing, with the performance uplift over the last 3 quarters showing quite clearly here in the graphs on the right-hand side. This was largely driven by a targeted H2 FY25 sales campaign that generated quality leads and is now delivering signed deals and account volume. We're seeing good opportunities continue to open up here, and the pipeline continues to strengthen. The next phase of our commercial strategy is replicating the success of issuing with strengthened sales activities across other domains in Payments ANZ, and in particular to scale the acquiring business. Post the acquiring replatforming, we now have much improved stability and elevated customer experience, and this is our next key priority to restart growth. A call out here on our anchor investment in AUDC. AUDC is the issuer of Australia's leading AUD-backed stablecoin, and it represents a strategic entry into the fast-growing digital asset and stablecoin sector. It essentially provides the infrastructure for on-chain finance and programmable money, with many applications opening up across payments, remittances, and trade finance. In late 2025, AUDC signed a strategic partnership with Coinbase, which is one of the largest digital currency exchanges in the world, operating in more than 100 countries with over 100 million users. AUDD is the first AUD-backed stablecoin to go live on the Coinbase platform. And it also recently listed on the SwiftFX platform, a leading Australian digital currency exchange. With multi-blockchain deployments, its growing ecosystem connectivity, and on-off ramp capabilities, AUDC is starting to scale its transactional volumes and capitalizing on the global momentum around stablecoins. And this is clearly evident in AUD payments volume, which grew 40% in the last 2 months alone on the key Stellar blockchain. And a point here to note for those with a keen eye on enterprise value, it's interesting to note the value of our stake in AUDC has now jumped to 16 million, as measured by the pricing of their pre-Series A round late last year. It's an interesting comparison to calculate and compare the Novatti market capitalization to the extrinsic value of our AUDC investment. I feel there is a disconnect here, and I feel this will become clearer and resolve in coming quarters as we continue to build confidence in the Novatti story and build further awareness of AUD scaling. So what to expect from here? Our turnaround has repositioned and strengthened the business over the last several years. The reset has been completed. Over my career, I've done this quite a few times now, and it's not easy. The execution from the team has been solid and consistent, and we now pride ourselves on being a disciplined business. Our pivot will retain a focus on profitable growth and unlocking the latent potential we've built, especially in the ANZ business. In summary, I'd put it to everyone here today or listening that we have a strong and consistent track record of execution now. We have a very clear view on our value proposition and where we're targeting. We're building a unique position, a bridge the traditional and evolving digital finance ecosystems to meet the needs of growth businesses. Our improved cash flows will provide flexibility to reinvest back into growth as we progress. And we have significant experience to build up and scale our acquiring business as the next growth vector. We're also starting to face into inorganic growth opportunities in what is a very fragmented and rapidly consolidating industry. Targeted M&A would provide an ability to accelerate our market position to scale, and it's an area that I'm starting to spend some more time on. In summary, we now have a stable business and a business really at the epicenter of the future transition into the digital economy. I'm well aware there is still much to do to deliver on our ambition. We continue to work on many initiatives with the same reliable execution seen to date to take advantage of those opportunities. With that, Beth, I will hand over to you for some questions. Actually, before I do that, and before we take some questions today, I'll just reinforce the message from Beth earlier on at the start of the session. These sessions are fairly sharp and obviously limited to quarterly, and we don't get a chance to open up to a question from everybody, or if you've got a question that subsequently comes to mind or you want to engage, then please make use of the investor relations channel, investor relations email. We don't have an IR team. We're a relatively small business, but we do get back to everybody. And often, if it's of use or from a time or availability perspective, it works better for a phone call. I'm quite often available for phone calls as well, as opposed to just interacting over email. So just encourage everybody as needed through the course of the coming weeks and months to make use of that investor relations channel.
Thank you very much, Mark. We have had a few questions, and so thank you to those who have already contributed to adding questions in. One of the questions we have is, how confident are you in your ANZ focus is gaining traction? But it's really only focused on one business that's highlighted. Are you confident that this focus?
So we set out in some detail last quarter the two priority growth areas for the moment as we see them. That's issuing and acquiring. Within the group, the ANZ business was the most heavily impacted through the streamlining and the restructuring. So for the last couple of years, the focus here has been almost exclusively internal, and it's seen a lot of changes. It made hard decisions to create a much leaner business. Yes, issuing has been our focus during that restructuring period as it required less change at the platform level, and it had a number of strong logos really to build on. But through that period, we've both turned and stabilized all parts of the ANZ business, and we've now seen 12 months of consistent direct EBITDA from that entire business. So we know the value proposition resonates with customers. We know the lost opportunities in other areas, and our focus now is really building up the non-issuing pipelines.
And there was a question regarding that actually around how are you going to replicate that strategy for acquiring?
So I would say it's not really about replicating the strategy, more so the approach. In acquiring, we've had to spend a lot of time and effort on replatforming, which is a very complex and intensive exercise. But that is now complete and behind us, and it provides a stable platform for growth. Our acquiring business is more broad-based than cards. It also encompasses account-to-account payments and also direct Asian wallet acceptance. So we have a complete proposition for payment acceptance methods available to our customers, which is a key wedge and point of difference for us. Another element here in acquiring is our talent depth. So we have significant leadership and product experience in the acquiring domain, more so than any other area in the ANZ business. So we know the market, we know how to get distribution, and we know what it takes to win.
Thank you. There is a question here around the good news around achieving ANZ has now achieved 4 consecutive quarters of EBITDA positive, which is a major milestone. Can you talk about what needs to happen in terms of scale, overheads, duplication, etc., for this to translate into sustained EBITDA for the group?
Yeah, so as I said, from an ANZ point of view, we spent a lot of time restructuring and building the business platform, systems, process, and talent to effectively start to build on and scale that business. So, from a growth perspective, you can see the growth in issuing starting to scale. And as we get back out to market in acquiring, I don't envisage large capital investment or large investment required back into the ANZ business as we start to add customers and/or add transactional volume to help drive that scale and margin growth.
Thank you, Mark. There are a couple of questions around AUDD, all along the same theme. Can you talk about how AUDD is performing and that contribution to the Novatti Group?
Right, so the key aspect to recall here is that AUDC is now deconsolidated from the Novatti Group. We maintain a significant equity share, but as a non-controlling interest. We obviously remain close to the company and key board or staff members, and we expect to integrate further at a product level with AUDD as we bridge into the digital finance opportunities and use cases I mentioned before. AUDD is by far the leading AUD-backed stablecoin in the market, and I believe it's years ahead of newer players at an operational level. The key element I would simply call out here again is that 40% growth in the last 2 months, which clearly demonstrates that the brand is resonating, market demand is there, adoption is intensifying, and it's reaching really a critical inflection point in its growth trajectory.
Thank you. What was the rationale behind taking the investment from Armitage?
So the first point I would say here is that Armitage approached us. They weren't on our radar screen. We'd not spoken or met with them before. They had actually been following the business for some time and had been impressed with the execution of the turnaround. And we quickly discovered that they understood the strategy, they understood the market opportunity and the overlap, and we're really keen to support the company to bring those two things together. As a listed company, we need more long-term institutional investors on the register. We've been seeking that for some time. Their investment appetite was manageable for us, and it directly supports our pivot back to growth.
Thank you. There is one more really around M&A. Do you foresee any M&A activity happening?
Look, as I said earlier, I believe inorganic growth is definitely it definitely has a part to play in the progression of the company. The payments market in Australia is a relatively small market, is very fragmented, and consolidation is occurring and has been occurring around us for the last couple of years. In my time as CEO already, we've been involved in a number of different discussions with a variety of parties. on different topics and scenarios, which is pretty normal for a small ASX listed business. Certainly, as a signal of intent and a practical matter for me as CEO, we have brought onto the board a person recently with a significant investment banking experience and specific expertise in payments. And so I expect that he and I will continue to build that dialogue with the board on a more frequent basis in this area over time.
Okay, thank you. And then I think there's one last one around partnerships. Can we talk about any customer partnerships? Yeah, why aren't we talking about the customer partnerships? Are there customer partnerships we want to talk about in the webinar?
So we have a range of different vertical segments and partnerships to distribute our product in the very diverse parts of our business. In the ANZ business, which is our core focus, the acquiring business is more partnership led than the issuing business. So we think about those two pillars and those two focus areas for growth for the moment. Issuing is a more direct business to large enterprises and or direct to other fintechs. But from a partnerships point of view and as a method of distributing product, that is really a more important mechanism in our acquiring business. As I said a number of times on this and other calls, we spent a large amount of time over the last couple of years repositioning and replatforming that business. And so we'll have more to say about partnerships and new partnerships and how we're going to market directly and indirectly in coming quarters.
Brilliant. Thank you very much, Mark. That's actually covered all of the questions that we've had so far. Just a last call out again that if we didn't cover a question here that you wanted covered, we come back to you later. Then feel free to email us at investorrelations@novatti.com and we'll make sure that we get back to you. Thank you very much for your time today, Mark, and thank you to everyone that's joined us. That concludes our webinar for today. Thank you.
Thank you.